What's going on, guys? Connor here with another great video. 401k. I know it sounds so boring, but the fact of the matter is practically everybody that works has been introduced to a 401k. So it's actually a super important matter. And the chances are when you were at your employer and they hired you, you had no clue what they were talking about. So this is for future upcoming generations of kids that need to be just a little bit more financially smart. So let's get into it. There are two big benefactors of a 401k. You're going to get free money. Yes, literally, you're going to get free money. So listen up. Or you get a tax deduction. So I'm going to give you guys a perspective of a 401k contributor like myself as a small business owner. And then I'm going to give you guys sort of a spiel or an example as if you were just an individual working for an employer. Say something like Google. All right. So the big two beneficiaries here are free money and, again, tax deduction. So how do you get free money? Well, it comes from your employer. When you sign up for a 401k plan, most plans or most employers are going to offer you what's called a 401k match, which basically means they're going to give you free money, a certain dollar value regarding how much you put in. So Connor puts in 1,000, they're going to give me maybe 20. So they literally give you free money depending on how much money you put in. We're going to look at an example of Google, all right? Here's Google's 401k plan. Google offers a 401k plan that matches 50% of the employee's contribution up to a total of $8,250. What's 50% of $8,250? It's like $4,000. So yeah, every time an employee of Google puts in $8,250 into their 401k plan, Google will match 50% of that $8,250. That person literally just got $4,250 for free, for saving, for his retirement, for his kids, for whatever. He just got $4,250 for free. That is why most people stress the importance of picking a 401k plan through your employer and following through and actually saving money because it's free money, okay? The other side of it is a tax deduction. Like I said, there's a tax deduction on the individual side, and there's a tax deduction for somebody like me who's a small business owner. So let's talk about somebody like me who's a small business owner. How does it work in my favor to have a 401k? So for example, my company says makes $100,000 per year. Connor contributes $10,000 to his 401k. At the end of the year, what gets sent to the IRS is Connor's company made $90,000 because he contributed $10,000 to his 401k. So Connor, as the business owner, gets to save $10,000 in his retirement 401k, and he gets to deduct $10,000 off his current year's immediate income. Therefore, Connor spends less money on taxes this year because theoretically he's saying he made less, so the government can only tax him on $90,000 instead of $100,000. So small business owners like me use the 401k plan to save for retirement while being able to take an immediate tax deduction. So theoretically, we just retain more money instantly in our pocket by not having to give out as much money to the government come tax season each year. Now, this is seen as a good thing and a bad thing, and I'll discuss why in a little bit. Now we're going to take a look at the individual. So if you were an individual working for a company, you're thinking, well, how do I get the tax deduction? See, it's not actually you manually doing the tax deduction like a small business owner would. See, since I'm the small business owner, I'm the employee and I'm the owner. See, whereas if you worked for Google, you're the employee and they're the employer. So what they do is they just say on your W-2 statement or whatever your income statement is that you just made X amount of dollars. You don't actually have to say, we put this much into our 401k and deduct it at the end of the year. That's all just done behind the scenes from your employer. So if you had put in $10,000 a year, just like Connor did, your W-2 is just going to say that you only made $90,000. And then, of course, you have had that $10,000 go to your 401k. Whereas for me, since I'm the business owner, I'm the one that actually fills out the paperwork or sends it to my accountant to make sure that he says 10,000 went to the 401k, and then we can take 10,000 off of the yearly revenue, so that way the IRS doesn't think I'm trying to scheme them and then they come knocking on my door. So thankfully for you, there's just less work as the individual who's employed because the employer does that work for you. So that is really the benefit for being an individual and having an employer. Now, what I said earlier about seeing it as a benefit or a disadvantage by using the 401k and taking the immediate tax deduction. Now, listen up. I know I'm talking a lot, and I know this could be somewhat confusing, but I'm hoping I'm not losing you guys. And if I'm doing a good job, make sure to hit the thumbs up button because I hope we can spread this video to as many people far and wide. So as I said, I'm a small business owner. Think about it like this, something you've probably never heard before. The 401k plan is a law. Literally, if you look it up, it's just a law. It's a law that you're agreeing to follow when you sign up for a 401k plan. It's not an investment plan. It's an investment vehicle that's going to take you from point A to point B. And what that investment vehicle is a law that's been written by the government, pretty much. And when you sign up for it, you're agreeing to follow it. Now, with that law says you can invest up to $19,500 a year. You can put in $19,500 a year, and Connor can deduct up to $19,500 a year off of his income each year if he contributes that much to the 401k plan. It's also, again, like we said, tax deductible. And if you're an individual, you get free money. Now, the disadvantage here is, of course, if you pull the money out early, you're going to get hit with the penalty. And anything that you earn, all the income, all the capital gains that you make up in that 401k plan by your retirement, you will have to pay income tax on at retirement. So here's the thing. Is the 401k plan the best benefit for you, or is it really the best benefit for the government? Let me explain. See, by me taking the short-term tax deduction each year, I'm keeping more money in my pocket for the immediate time that I'm living. But if in the event I live till like I'm 65 or 70 and I want to retire and I make a boatload of money in that retirement account, then I'm going to have to pay a boatload of money in taxes. So it's actually in the best interest that the government pushes 401k plans for individuals like you to open up, in the hopes that the individual like me and you save up so much money that by the time retirement rolls around, the government gets to tax a boatload of money. See, if you didn't invest any money into the 401k plan your whole entire life and just kept it, you yourself would make less money, and B, the government would have less money in 60 years to tax. So it is, in fact, the government who benefits the most from long-term appreciation on 401ks than it is the individual. But regardless, the individual will benefit significantly more over the length of his life if he chooses a 401k plan and sticks to it rather than not investing at all. So yes, Big Brother is the bigger beneficiary here, but in the end of the day, everybody wins by using the 401k. So if you're in the position and you're working for somebody, make sure that you check into your 401k and see what kind of plan they offer, especially if you're working for Google. Some companies will offer better 401k plans than others. Some other companies may not even offer anything that's remotely good. So definitely do some research. I will break down another video telling you when you should probably switch out of a 401k and maybe into a Roth IRA, but only if you guys like what we had to offer in this video. So make sure to hit the thumbs up button below and subscribe to the channel if you haven't already. If this video doesn't at least get 1,000 likes or something like that, then I don't know if I can make the next video. So let's make it possible. Thanks guys for tuning in, and I'll see you on the next one. Take care.